starting with the economics of the situation, I think that everybody's, like I said, in a different boat. Some people are open for business. Some people have been doing better than ever. Some people have no employees and haven't had their doors open since the beginning of March. So we're all kind of in this really wide spectrum of being in different places. Some people have let people go. Some people have furloughed people. A lot of people have asked questions about what's the difference between a furlough and a layoff, and that's kind of a legal question, but we can talk about that if anybody has specific questions. The hot button for us at SKC the last 10 days has really been the PPP loans. So I know we've been talking to a lot of our clients about how to apply for those loans, connecting them with their banking relationships so they can get those loans. We at SKC have actually seen some of our clients already get money in their accounts, so that has been a terrific win for us. The first client that we know of, today's Wednesday, got funding on Monday, and we heard about it yesterday. So we were very excited that we've actually seen cash flowing into our clients' accounts, and we do have a handful of clients who have gotten closing documents, and they're expected to actually have cash flow in the next couple of days. It is bank specific on how quickly some of these funds are moving, but we certainly are in a positive place about people actually getting funding. I'm not going to start with any of the qualifications to apply or how to apply for the PPP loan unless somebody actually wants me to touch on that. At least for us, a lot of that conversation has happened already, but if somebody has a question, I'll pause for a second about how to apply or what you need to apply, or if you're eligible to apply. Okay, so we did get a couple of submitted questions for the PPP loan. The first one is, what's to prevent a business from receiving PPP loan money and not using any of the funds on qualified expenses? Wouldn't it just become a low interest loan? So I'll clarify some of the language that I'm using here, these qualified expenses. For those of you that don't know, you have to certify that you're going to use the funds for payroll, for rent, utilities, or interest on existing debt from before February 15th, 2020. There is a little bit more in the definition of payroll. It also includes health insurance premiums and profit sharing or pension allocation money for employees. So when you do apply for those loans, you are certifying that you are going to be using them only for that purpose. And there's also then the forgiveness piece of it. But this is separate. So if you're going to take the PPP money and not use it on those handful of qualified expenses I mentioned, it very specifically says in your closing documents you are at risk of being charged with committing fraud, because the PPP stands for the Payroll Protection Program. And the law very clearly states that 75% of that money, regardless of whether or not you care about the forgiveness aspect of it, really needs to be used for payroll costs. So Andrea, did you want to add anything to that or piggyback in any way?
No, I think that sums it up. The only additional clarity we received was last night when we received the additional regs on Schedule C and the concern of, well, if I don't have payroll, what do I use it on since I'm a Schedule C employee? And the regs stated you would use it on yourself. There are certain limitations, but it's still to be used to pay yourself or your employees.
Right. Another question that we got, and it talks about unemployment. So as a business owner who has been severely impacted by this situation, should I file for unemployment benefits? There were a lot of changes that came out through the DOL about unemployment, and I'm going to tag Andrea in for this one because she read the new regulations that came out about the federal unemployment piece that is relevant, I think, to business owners for New Jersey.
So yesterday there was the DOL, the New Jersey Department of Labor, issued guidance on how to help self-employed individuals with independent contractors and gig workers and with the issues that they're having. And While they're not eligible in New Jersey for regular unemployment insurance benefits, there are two federal programs. One is the Pandemic Unemployment Assistance, which is, you'll see it as PUA, and then possibly the Families First Coronavirus Act. However, one of the caveats to being eligible for the Pandemic Unemployment Assistance program is that you're ineligible at the state level. So what the New Jersey Department of Labor is suggesting to do is to apply for unemployment through the regular process in New Jersey as a Schedule C or an independent contractor. You will get, or they're anticipating you will get denied. We have seen a lot of approvals and things that, a lot of issues or submissions that required additional review, but were just approved anyway. But if you do get denied, it makes you eligible for the additional federal program. However, the guidance on the federal program is not yet released. So we're hoping and anticipating that within the next week or so that we'll get additional guidance, but have not received it yet.
Thanks, Anj. The other piece, there's a question that just came in. I'll get to that in 1 second. But the other piece on unemployment, it depends also on what type of entity you are. So we've seen our S Corp clients who are on payroll and receive W-2s. They've already been accepted as owners for New Jersey unemployment. So it does depend, again, case by case of what type of entity you are. So the question came through on the chat. On the PPP funds, is there a time frame you have to use it? If you change headcount and reduce salaries under their 25%, will funds still be forgiven and not a loan? So this speaks to the forgiveness portion, and the period of time that you have to use this money is pretty much 8 weeks from the date that you get funded for it. So not when you get applied or when you get approved, but when the money actually hits your bank account. And there is a reduction in the potential piece that can be forgiven if you reduce your total salaries by greater than 25%. And also if you reduce headcount by a certain formula. The FTE, the full-time equivalent calculation that they're using for this forgiveness is actually not bodies or 40 hours. It's actually 30 hours a week. Counts as an FTE, a full-time employee. So the formula is, and I can pull it up because I think I have it on one of our cheat sheets here. And there also, by the way, is not clear guidance out yet about the forgiveness portion. So I can tell you what it says in the bill, but there's going to be an application process that you need to go through with your bank. So it's going to look a little different by bank, on a bank-by-bank basis, and you need to apply for that forgiveness within 60 days of being given the loan. So what it's going to compare to is the average number of full-time equivalents, which again is that 30-hour per week. As a business owner, you can choose the time frame to compare it to. So we're taking the 8 weeks post funding, and you're either going to compare it to the number of FTEs from February 15th, 2019 to June 30th, 2019, or from January 1st, 2020 to February 29th, 2020. As a business owner, you have the choice to pick which period you want to compare that 8 weeks to. Again, they haven't fully come through saying how much they're going to reduce it by, but we expect guidance from that in the next 30 to 45 days. Again, you have to use at least 75% of your loan money towards payroll or keeping health insurance or profit sharing or pension distributions. That's just one of the certifications that you have to give. Another question that came in is what to do if our bank is not yet prepared to receive applications for the PPP program. Should we wait for them or use another bank? So there was a lot of scramble about this when the loan application first started, because some clients didn't have lending relationships, some clients didn't have a bank that was SBA approved. So what we've been telling people is it's a bucket of money, and at some point that bucket of money will run out. So the sooner that you can get an application in, the better position that you're going to be in to be in line to receive funds. There is a stipulation for the most part that you're supposed to have an account on file with your bank from at some point from February 15th, 2020. So it's been very challenging to get banks to accept new clients through this program, but we do know of some that are. So we can make an introduction offline because this was a pre-submitted question, so we know who submitted this. We can make an introduction offline to a bank that we know that is actually accepting applications for new clients and new customers. We have another question that came in from this morning, and Andrea, I'll kick this over to you. If we have two companies, one that's our main company, and I also happen to be a realtor, are there already approved SBA programs for PPP? What other program should I be applying for as a realtor, and can both companies apply for the PPP program?
So as a realtor, you're reporting your income on a Schedule C. We just received the guidance last night that I mentioned earlier that Schedule C taxpayers are eligible for the PPP loan. It does require that you have a 2019 Schedule C. It doesn't have to be filed. It actually specifically states it doesn't have to be filed, but you do need the 2019 Scheduled C to submit as your backup. So you are eligible for a PPP loan as long as you have profit. So if there is a loss on your Schedule C as a realtor, then unfortunately you would not be eligible for a PPP loan. The calculation for your loan, if you do not have employees as a realtor, they would take your net income from your Schedule C, divide it by 12, and multiply it by 2.5. There is additional guidance and restrictions for Schedule C, since the understanding is that most independent contractors or individuals filing for Schedule C, they don't have a warehouse where they're paying rent, and they don't have employees, so they don't have the additional cost for the additional 0.5. So it did stipulate that part of it will not be forgiven. And Sarah, I just read it last night, so please correct me or jump in if I'm misinterpreting what I read at about 11 o'clock last night.
No, you're still good.
So, because it was released at about 5. So you are eligible. I do know that some banks, prior to this guidance coming out, did not allow you to apply if you were a Schedule C. Whether it looked at the bank accounts that you currently have open with them, and it didn't see a business account, so it said you're not eligible. That may change. Again, if your bank is not allowing you to apply because you're a Schedule C, then we can make an offline introduction to a bank that is accepting.
Thanks, Andrea. So there was a question that came in via the chat. Can you increase salaries below $100,000 or increase your match on the 401k to get up to the 75% for payroll without raising headcount? So you can make adjustments to your match, and you can do some things on the payroll side, but if you have already reduced your employee workforce and it's not comparable to either of the two periods that I mentioned before, then there's still going to be a aspect of your loan that can't be forgiven, because they really want to keep people employed through this process and through this program. There is an exception if you let people go after February 15th, 2020, and you bring them back after a period of time after the CARES Act has passed. The original language said 30 days, but we've also heard conflicting information that says it's till June 30th. That there is an exception for people that you bring back on board. So an aspect of your loan may be forgiven even in that 8-week period if you hire them back after that 8-week period, but we're still waiting on that specific forgiveness guidance. So it is a gray area, and it does make people a little bit nervous because they do want the most of that loan forgiven as possible. And as soon as we hear any kind of guidance on the forgiveness piece, we absolutely will circulate it to all of our connections.